Hello, everyone, and welcome to another episode of the Business Growth Show, where we talk about all components of business and how to utilize them for exponential growth. My name is Athin Cassiotis. I'm a serial entrepreneur, international speaker, result strategist, business coach, mentor, and consultant. Today, I have an awesome guest. He's a serial entrepreneur, tech founder, entertainment CEO, advisor, data and growth expert, venture capitalist, and blockchain evangelist. He is the founder of festivalPass, the world's first festival and live events subscription service providing access to music, film, food and wine, and tech and innovation. He has over 25 years of business, technology, and management experience, having founded and exited several companies in that time, including helping to launch film festivals in multiple locations. And most recently, he led a data platform and consultancy in the entertainment space with clients including A&E Networks, AMC Networks, Screenvision, movietickets.com, and was brought into MoviePass as an interim head of data. Welcome, Ed Vincent, and thank you for being on my show.
Athin, thank you. I appreciate it. Glad to be here.
You're very welcome, mate. I'm sure it's going to be awesome for everyone watching and listening today. So you're a very successful entrepreneur. So for those people who don't know who you are, just please introduce yourself by telling us about you and your journey.
Sure. So most important part is I have three daughters. So I'm a dad of three girls, which is good and happy, 16, 14, and 9. So add that to the mix of the journey. Yeah, I've always been an entrepreneur throughout most of my life. And I went through some traditional channels early on. I was an investment banker in New York City till about 1999, which then I left to start my first e-commerce company. It was called City Stuff, and we sold everything that made cities famous. It was a little bit of fun. Those who know, whenever you're in a major city and there's something unique to it, often food or some other things. But anyway, sold that in 2001, and then had an agency through the 2000s, and that's where I really kind of fell in love with live events. And that leads to what we're going to be talking about with festivalPass. It was an experiential agency, about 70 people. And that's where we dealt with and helped launch a bunch of film festivals in Vail, Colorado, and worked on one in Sonoma Valley. And we even owned one down in the Dominican Republic. So it was a lot of fun to actually be part of that and really understand that live events are true passion points and unique points of interest. From there, I went on and founded a SaaS-based software company for the franchise and multi-unit space, sold that in 2014. And then I think you mentioned in your intro, I had a data analytics company prior to festivalPass, which we helped a lot of big television consumer brands, film studios, and film brands really understand their consumer data. And a lot of that background kind of leads up to that point of why festivalPass. Like, first of all, what is festivalPass and why? And it actually has a little bit of every one of my previous companies all rolled up into a platform that I think has a huge global opportunity. Now as we're kind of moving through the pandemic, we did launch it right before the pandemic came. So it helped us get through the process, and we focused on building technology and building relationships throughout the time frame. So there's a little bit of a silver lining. And then now, at least in the States, we see a massive amount of live events coming back with the very large vaccinated population and a lot of testing, et cetera.
Yeah, awesome, mate. Great story there. So much awesome experience, and looking forward to delving deeper into it now. So, I think one of the key parts for you as well was being the interim head of data at MoviePass, right? Which was just sort of before festivalPass happened. And that sort of got you thinking, I guess, to leading you to making a membership-based pass for festivals. Do you want to tell us a little bit about, the transition? Because I guess one other thing on top of that is that I noticed that, you founded the business basically as COVID was starting as well, right? So it was like a very, challenging time, let's call it, for everybody, especially festivals in there. So how did it lead to that? And how did the timing of it all happen around COVID as well?
Yeah, so to answer your first question, is MoviePass had a great product market fit. It was mostly in the States, but it was a company that went from 20,000 to 3.5 million subscribers in an 18-month period of time, over $500 million in revenue. And being like part of watching that happen, but also at the same time realizing some of the mistakes they were making along the way, meaning it was a product market fit where people really wanted a subscription service to go to theatrical movies, but the business model that was being used was not the right one. There was we can get into it. It'll probably take a full podcast just to tell you all the mistakes that company made along the way. But what I found fascinating on my side, I was able to dig into the data of 3.5 million customers, meaning I could understand how consumer data really drives the needle on choices and how people participate in entertainment, and then realize that the live events business, which I preferred from a personal passion point, was actually 10x the size, actually 20x the size of the film business in North America, meaning that there was a huge opportunity to create a subscription service that both millennials and Gen Zs tend to prefer in terms of how they want to consume product. And that's everything from, subscription services to entertainment, to exercise, to many other services, as well as the concept of being able to budget for certain parts of their life. Millennial and Gen Zs tend to create buckets of how they want to spend money. This is what my rent or mortgage is. This is what my entertainment budget is. This is what my food budget is. And it tends to be the way they shop. We're lucky enough to have some investors. One is kind of the global keynote speaker for millennials and Gen Zs, a gentleman by the name of Jason Dorsey. And then we also have investors and advisors that sit on the board of many millennial-driven companies like Ally Financial, which is a banking company mostly for millennials. So there's a lot of insights that we got along the way. But just even back to the bridge from MoviePass to festivalPass, is I realized there's a better way to build an infrastructure around subscription-based models. And for us, a big core of that is a credit-based currency system. There was a company here in the States called ClassPass, which was a subscription service for exercise for people wanting to take classes, whether it's Pilates or yoga or spin or whatever that is. And about 5 years ago, they moved their model from a similar MoviePass-like model to a credit-based currency model. And it really helped them understand gross margin metrics that enabled them to then grow into 30 different countries. And they actually just got acquired for over $1 billion recently. So anyway, it's really about learning the process of multiple different companies along the way to find out what really fits in the live entertainment business that we're in.
Yeah, nice, mate. What an answer, Ren. I love the credit-based side of things. It's very cool to sort of get a certain amount for what you've got. And, I think it's been a bit up and down. I'm assuming now in, sort of the tail end of 2021 to 2022, I know especially in the US, there's a lot more sort of festivals and stuff happening now. So did you sort of have a bit of a dry patch, I guess, for a while, and now the growth is starting to sort of exponentially grow over the last sort of 6 months and beyond?
Yeah, so we built the technology throughout the pandemic, and we started testing some marketing to ensure people understood and really wanted to participate in the market. And the one thing to mention is it's not just festivals. So we're all live events. We have over 80,000 live events on the platform. So it's everything from any music concert or artist you want to see, to any sporting event, any football game, basketball game, soccer game, to any Broadway theater or anything like that. So it's not just festivals. And it was interesting as the pandemic continued making it hard for people to go out. There was different pockets that came back a little quicker than others. In the southern part of the United States, a bunch of outdoor events started happening, and then there were some pod events. So the answer is yes. We went through a process where we started onboarding a bunch of members with the promise of we will be having more and more events in the future. And this was almost a way to actually have a savings account. So, you commit to $20, $50, $100 a month and start building up credits. Those credits will never expire. And, we even used to joke, we didn't really use this in marketing because I wasn't sure if we're allowed to, but it was the idea that, by committing to it and getting the discount or the less charge you'll be paying for live events, you were earning more than you would if you kept it in the bank account. So the answer to your question is yes. Over time, people started embracing what we're doing, and now we have tens of thousands of members, about probably over 60,000 members now, and now that a lot of events are really planned for 2022. We're ready to go in hyperspeed and turn that into 1 million subscribers by the end of the year.
Yeah, awesome, mate. Love the growth potential there, over 20xing it basically. So love that. So with just so I understand a little bit more about the subscription model. So I'm assuming you've got maybe sort of, I don't know if there's different price or different tiers. I don't know how people choose them, and then sort of a certain amount gets the credit. So how does it work with all of that?
Yeah, so we have 3 core tiers right now. I'd say 4 because there's a free basic tier. So as a free member, you don't get any credits each month. As the next tier up, you pay $19 a month and you get 15 credits. At $49 a month, you get, I think it's 42 credits, and at $99 a month, you get 90 credits. So the point of that, if you think through what it means, is when you get those credits for your paid subscription, you can then redeem those credits for any of the 80,000 live events, and we have 600,000 hotel room nights on the platform as well. But the key is when you commit to a higher per month price, you're effectively paying less per credit. So as an example, at $19 a month, you're paying about $1.27 a credit. And at $99 a month, you're paying about $1.10 a credit. So what happens is if something costs 10 credits, maybe do the math easier, 100 credits. If something costs 100 credits, at the lowest tier, you're paying about $127 for that event. But at the highest tier, you're only paying $110 for that event. So the higher you begin to save more and more each time. The other key thing is globally, there's been this kind of friction in live event ticketing where there's a lack of transparency in fees. So a lot of people get frustrated because they go in and buy a ticket they think is $100, and then when they check out, it costs $160. So part of what we're doing is ensuring that nobody has ever felt that there's a lack of transparency. So if something costs 100 credits or 50 credits, that's exactly what it costs when you check out. So there's no additional fees charged at the end. So at the end of the day, out of those 4 tiers, even if you're a free basic member and you just choose to buy tickets directly from festivalPass, you'll save at least 10%, if not more, than you would anywhere else buying tickets. If you then upgrade to $19 a month, which is the gold plan, then you're going to save probably another 7 or 8% on every ticket. By the time you upgrade to the $99 a month founders plan, you can effectively save 20 to 30% on every ticket you buy because you're not paying fees, and we're negotiating discounts with some of the providers.
Yeah, nice. Love that, mate. And just one, I guess, follow-up question. So obviously there's all these discounts, which is amazing. And I'm sure, the deals and the buying power that you've got helps for everyone to benefit. Is it based on, is every sort of event, festival different in certain, pricing as they are, and then the credit sort of just basically reflects whatever that is for each individual one? That's
correct. So it is all dynamic pricing. So it's dynamic pricing with a value discount based upon your commitment. So at the end of the day, the easiest way to think about it is we're giving away some of our margin back to our customers because they're committing to paying a monthly fee. And because they're committing to pay a monthly fee, that's more predictable revenue for us. And with predictable recurring revenue, as you guys know, this is a business show, the valuation multiples on a recurring revenue business are higher than a transactional business. So we're happy to give margin back to our customers in return for having consistent revenue, and that consistent revenue equates to higher multiples. So our company can be valued as high or higher than a transaction-based company that is charging the consumer more.
Yeah, definitely, mate. Love that. That's awesome. And, I'm big on music festivals when I was younger, especially as well. Enjoyed them. I'm sure you did as well from the sounds of your experience here. So I guess, do you want to maybe just let everyone know about maybe some of the music festivals and things that, they can attend, or whether it's, you've planned for, if they obviously haven't potentially happened yet on festivalPass?
Yeah, so across the board, it's as I was saying earlier, it's really everything. So in terms of concerts, we have access to both some of the primary and the secondary market. And without getting too confusing, I don't know if everybody fully understands the difference, but like the StubHubs of the world are considered the secondary market, and then the Ticketmasters are ticketers for the primary market. But we basically have access to most of the same tickets you'll find anywhere in the secondary market, and we have access to lots of direct deals we have with the primary market. And all that means is if you want to go to almost any concert, especially here in the States is where we're rolling out now, you want to go to any concert at any arena, we're likely going to have a ticket for it. If you want to go to any football game, soccer game, I should say here, or American football game, we'll probably have the tickets. So Dallas Cowboys, New York Giants, pick any NBA basketball team, LA Lakers, anything in the sporting arena, we're likely to have the ticket for it. And then on the other side, Broadway theater, traveling Broadway theater, you want to go to the Lion King in New York, you want to go to Wicked. I think we even have a lot of stuff in London, even though we don't market there yet. But the point being is that you can pretty much get any ticket to almost any event you want to go to. And where we're going to be expanding a little more is where some of the tickets that don't traditionally end up on some of the big ticketing platforms. And what I mean by that is there's about 4,000 independent music venues in the United States alone. And all of those independent music venues are, that's the fabric of what happens to bring music artists up, right? They start by playing, their local club in their local town. Then they're on a tour, hitting 20 clubs throughout the country. They're playing 500 cap, rooms, and then they go to 2,000 cap rooms, and then, before you know it, they're playing arenas and amphitheaters, et cetera. So a lot of the access to those are happening in some of the major cities. We already have a bunch of the smaller venues, like in Austin, Texas, or New York, or LA. But we're looking to more and more get access to some of those smaller venues.
Yeah, awesome, mate. Love that. Really cool. And let's delve into a little bit more of the business side. So you talked about the SaaS business model, right? About the subscriptions, and you've got a SaaS business, and obviously big prime for big growth and scale, as you have mentioned. So if people are wanting to get into it, because there's a lot of appeal, let's call it, right, to get into it, but at the same time, you got to do it properly, because there's a lot of things that could go wrong potentially in these businesses. Whether you run it non-profitably and just try and make a valuation to sell, or where you actually run it profitably and, but still has a great valuation, right? There's different ways of doing it. So do you want to maybe just give everyone a couple of tips about sort of how you're looking at that to make sure that, the business is a success for anybody else wanting to do it?
Yeah. So, I mean, at the end of the day, it's a marketplace, and marketplaces have certain characteristics that have potential to be successful. And then on top of it, marketplaces sometimes can be hard because you need both sides of the marketplace for it to work. So you need supply and you need demand. So the first thing on the concept of a marketplace is there's been tons of marketplaces that have tried and failed. And part of it is because they don't really meet the fundamentals of what makes a good marketplace successful. So I'll give you a few quick concepts, right? So everybody thinks of marketplaces like Airbnb or Uber and Lyft as successful marketplaces, or Postmates. I don't know if they have a lot of food delivery services online in Australia. But when you think through the process, one of the things that makes it successful is understanding whether it's a route density marketplace or a global density marketplace. So like an Uber or a Lyft can be successful in a single town. So as long as you have enough riders wanting to ride, and as long as you have enough drivers wanting to drive, you could have a successful marketplace only in New York for Uber. Now, the flip side is something like Airbnb. You can't, right? People that live in New York don't want to rent Airbnbs in New York. They want to go travel somewhere. So you need actual inventory across the globe or across the country in order to make it successful. And every piece of inventory that's added to that marketplace makes it more attractive because it creates diversity and the ability for people to engage. So that if you either have to have one or the other in a marketplace to be successful, or both. And if you have both, then you have even more potential. We like festivalPass because there's both. People can actually sign up for this monthly subscription, get their credits, and they can go to a couple events locally, their local club, their local sports team, a food and wine event in their town. But they can also use the same service to go to Coachella or ACL, or you pick your big 50,000 person festival. So that's something that we've loved about why the business. Second thing is, whenever you have a marketplace, it's the transaction volume and pricing. So you either need a high volume if you have a low price. So Uber, Lyft, $10, $20 rides, you might use it 5, 10, 15, 20 times a month. That has high volume, even though the transaction price is relatively low. Sometimes it's not so low when you're coming from the airport and it's $80, but and then the flip side is somebody like Airbnb. Most people are only using Airbnb once, twice, 3 times a year, but they're spending $500 every time they use it, or $1,000 or whatever it is. So as long as you have one of the two, it can work. Again, in festivalPass is we think we have both, because there's a potential for high volume. But then, as everybody knows, live event tickets are getting pretty expensive. So there's some high transaction volume where you might spend $200 just for a single event, or festivals that are $400 or $500. But there's also $10 tickets to local events, and we have all that as well. So that's 2 of the 4. A couple other things is just the desire for people to be more efficient if they go back to the marketplace. I used to use this example, which was kind of funny, is years ago in New York, when I lived there for 23 years, there was a marketplace to help you find a cleaning lady or a cleaning person. And a lot of people would go use it. And it was great the first time. But once you found the person you like to clean your apartment every month, you just Venmo them the money directly. Like, why bother going to the marketplace? So there's this concept where a marketplace needs to provide value and efficiency, and the type of businesses where you secure and identify one person or one service, and then can go back to them anytime, is not a good. It's not a good subscription driven or even a transactional driven marketplace. That's why all those business models changed to be something where it's providing mostly payment and access to something, and then the service providers are actually paying the transaction. But anyway, those are 3 of the 4, and I'll probably bore you to death if I keep going on. But those are, I think you were asking some of the things, and the biggest thing is really making sure supply and demand work on both sides. The one thing we did on festivalPass is to ensure, that's why we have 80,000 events right now, is we know that nobody's going to sign up and pay $20 or $100 a month to subscribe to something when you don't have a ton of events that they can go to use their credits. So it was important for us to make sure we did all the deals to get all these events. And now it's really consumer marketing that's going to drive, the rest of the acquisition strategy.
Yeah, awesome, mate. That was really cool how it all breaks down there. I'm sure that was valuable for everyone. And a big one now is NFTs, right? Becoming very big in the world. Everyone's talking about them a lot, and there's these big things, especially for artists and other areas. So I believe that, festivalPass with you're providing early access to artist NFTs, which sounds very enticing and things like that. So do you want to maybe, just very quickly just explain, maybe for some people that don't know what an NFT is, but then also tell us more about how we can benefit from it as well?
Yeah, I think leading into it, a good way to kind of describe it is, I gave you a lot of the value proposition of festivalPass based upon just saving money. And that is absolutely a good value proposition. But there's a lot more to it. Is when you're a member of festivalPass, there's a bunch of perks as well. And we're constantly finding new ones that we can add to the platform. So yes, you save money every time. That's great. The biggest one is you're never paying a transaction fee or a ticketing fee, which is kind of frustrating for a lot of people. But we're going to continue to build other things. Like, we brought hotels onto the platform so that all of our members can also get discounts on hotels, or at least pay less for them. along the way, we're rolling out something we call micro subscriptions with some music artists so that fans can sign up almost to a digital fan club, if you will, for that music artist, and they can get access to certain things like maybe tickets before anybody else, or once a month that artist will go on and do a live chat with their 1,000 people that pay for their separate micro subscription. It's really kind of like a super fan concept. So amongst other things, we'll continue to provide more value and benefits, but what you mentioned in the world of NFTs is we're very pro not only blockchain and crypto overall, but this evolution of the creator economy, the ability to enable our artist partners to find ways to monetize some of their relationships directly with their fans, obviously using our platform as a conduit to do so. So bringing that to NFTs is we have this kind of plan and process throughout 2022 to enable micro subscriptions for our artists, and then to enable our members to be able to purchase NFTs directly from the artist, or potentially a project that we're creating here at festivalPass. So we do have our first project. I think we're going to call it the Festival Family, but we'll see where it rolls out. But it's likely going to be a project with 10,000 NFTs that are all caricatures or all art of some of our music artists that we have on board. But I'll take a step back. Is for those who don't fully understand NFTs, it's really at the end of the day a digital asset, and it's a digital asset that both has that has a scarcity. So there's a specific amount that's only available, and just like any other asset, it has the ability to rise in value. But most importantly, with NFTs, which are different than other crypto assets like Bitcoin or Ethereum or others, Dodge, NFTs tend to come with some kind of utility. So some kind of thing that can reward the holder of that NFT. So for example, in our world, if we're selling a single NFT of a specific artist that's part of this festival family, somebody might buy that NFT for, it's usually denominated in Ethereum. So 0.5 ETH, let's say. So that means they paid about $2,000 to buy that digital asset. And that digital asset is unique and only exists in that one source. As that artist grows in popularity, access to ownership of that specific NFT will also grow in popularity, therefore driving up the cost of it. Therefore, just like, when people buy into the stock market, there's only two ways to make money. Either it goes up and then you sell it, or there's a dividend, and with that dividend, you earn return on the ownership of that asset. Same thing in the world of NFTs is either somebody will pay more for that NFT because they want to hold it, or there's some value such as a dividend and or other utility coming back to you for that ownership. So a couple ways that works is utility could be access to certain things. So if somebody owns a specific NFT that we produce, one of the 10,000 people, let's say, that own an NFT in our first project, they may have special access to things. We might have special events that only those NFT holders can attend. We might have the ability to utilize that group of intangible assets, the art from all of those NFTs, for merchandise. Let's just say we want to start selling Festival Family t-shirts. It's a bad example, but it's easy to understand. If you own one of the NFTs that are in that art, we have to pay you a license fee, just like you would have to pay a license fee to sell a Nike t-shirt or to sell any artist t-shirt. So the idea is the owner of that art is owning an asset that anytime it is monetized, they're getting paid for it. And then that goes on and on. There's a lot of cool concepts. I heard about another project where there's a bunch of NFT driven fashion models, and they're going to walk in the New York City live fashion show. The NFTs are going to have their own show within the live fashion show, and each one of those NFTs is going to be paid like a model. So they're actually going to get monetized and receive income from the ownership of that single NFT. So it's exciting. It's still early stages in what it is, but I think, in my opinion, the space of NFTs is really driven around passion points. So music, film, theater. And that's where some of the artists that are creating this can find a way to connect directly with fans, create opportunities for their fans to own a piece of their brand. So it's a piece of their intangible asset, and earn along with that artist as they grow.
Yeah, what a great explanation, and really cool to hear about all those things. I'm definitely intrigued to get into them a little bit more. So I'll be looking out for festivalPass family, or whatever it's going to be called in the end. So that's awesome.
Yes.
And
I think a big part of that too is there's not many places today that you can hook up your crypto wallet to a platform to be able to utilize. So the first thing we'll do even before launching the NFTs is we're going to enable, probably MetaMask and Coinbase, but crypto wallets that are attached to the profiles of our members. So they can choose if they want to pay for their membership in Bitcoin. Sure. You want to pay for it in ETH? That's fine. So the point is just being able to utilize another form of currency outside of traditional money to pay for something. And then of course, we have our credits are useful for hotels, useful for tickets. In the future, they'll be useful for other things. So now it's a way to kind of move your crypto back and forth in between fiat dollars and crypto dollars.
yeah, awesome, mate. Very cool. Definitely the way the world's going now to be able to pay for things differently outside of the system. So you mentioned before having a few key investors and things like that, which I know is extremely important, especially in a SaaS type business when you're wanting to grow quite quickly to get the capital in. So when, if people are wanting to get investors in, what do you look for when you get investors to make sure that, I guess, you get the best bang for buck and right fit and things like that?
Good question. The jury's still out on how we ultimately finish the financing for the company, meaning we have a lot of great successful entrepreneurs and even professional athletes that have invested in our company. And each one of them brings some value to the table. I think I mentioned earlier, one of our investors is the co-founder of HomeAway. You were talking about Airbnb, but its competitor is VRBO. HomeAway, co-founder of that company, is an investor. The other one I mentioned, I'd say we have about 20 investors that have all built multi-$100-million companies. So it's really important to have them on the cap table and along with us, because they're always making introductions that will help grow the business. So that's one piece. The second is we haven't taken traditional venture capital yet. But we're talking to dozens, and many of them really like our model. And the goal, we're just not sure yet if we're going to accept traditional venture capital to grow our business. If it's the right partner at the right time, we would. I do see a lot of crypto-friendly VCs coming out, and there's a ton of money going into the crypto drive. So I might consider taking dollars from those who fully understand kind of where we want to be in a year, 2, 3 years out, rather than the traditional sense. So we'll probably in the next 3 to 6 months, we'll know if we've chosen that route or not. And then what's interesting is it's different than about 4 or 5 years ago. I built companies and I've raised dollars from traditional VCs, from family offices, from numerous other places. But today's world is unique because there's options. There's low-cost debt options. There's crowdfunding options. We even tested some crowdfunding campaigns like over the summer, and it was interesting. And I do believe in the future there's going to be a lot of secondary market activity for privately held companies, which will increase the likelihood of crowdfunding. And crowdfunding doesn't have to mean kind of even what's traditionally out there today. It just means that it's almost like, not almost like, it is like allowing typical investors to invest in the company outside of the company being public. And here in the US, you can raise through a Reg A up to $75 million a year through crowdfunding, if done correctly without ever going public.
Yeah, awesome, mate. Really cool. I love that. And I guess, following on from that as well, normally to get great deals these days, they don't normally just come up. Normally you need to, negotiate them, let's call, and structure them, in a particular way so that it benefits ourselves, but benefits everybody to make it happen. And there's a lot of different ways to do deals. And I think a lot of people, unless you're sort of around that space, don't really understand these different complexities, I guess, about structuring deals and things like that. And I know you've been around this for a little while. So do you want to maybe just tell us a little bit more about, what's a good deal? How do we, look at good deals, and what are some things that we should think about when structuring good deals as well?
When you say good deals, you mean from the investment side or just?
Well, it could be either, right? It could be from investing, or investing obviously has, you want to be able to protect yourself where possible and other things like that, as you would likely know, but there's potentially other deals as well that are out there if people are wanting to do something. So yeah, whatever comes to mind from you.
Yeah, I mean, the simple answer is win-win deals always win, meaning that if by partnering or going into a joint venture, or not even a joint venture, just a business partnership with somebody, is if you're both gaining something out of it and it's not one-sided, you're going to win. And same goes with investment, right? And I think what's happened, some VCs get a bad name, venture capitalists from the old days where they were a little less founder friendly, meaning that there was a bunch of terms in the documents that made it harder for entrepreneurs to have the flexibility to build the business the way they wanted to. So I would always highly recommend any entrepreneur going that route understands that, right? There used to be a term in raising capital that most VCs required, which was called a participating preferred, which was a preferred form of stock. Luckily, most of them now don't require it, but it was very venture friendly and not so much entrepreneur friendly. It was effectively double dipping on your investment, where they required the money back almost like a debt instrument. And then on top of it, they still got their full equity stake, which is punishing to the entrepreneur to be able to actually have the flexibility to grow. And then just other things. It's when an investor puts money up, they deserve the right to have that money protected, and they deserve the right, as it is less, the more risky it is, they deserve a right to have a higher economic return. But what's the hardest part is when there's such strong governance and control over the entrepreneur at the wrong stage. When you're an early stage business, you need the flexibility to pivot and make decisions and grow. And, it's difficult to be in a place where the CEO or the founder or the entrepreneur doesn't have that flexibility.
Yeah, awesome, mate. Love that. All those key points there. And there's been so much value here today on a festivalPass along a variety of business topics here. And as we're wrapping up now, just what one, I guess, key piece of advice would you give to all the entrepreneurs watching and listening today?
I'd say patience, and this isn't a quote from me, and I don't even think it was Jeff Bezos's quote, but he made it famous. And it was really about, and I'll probably have to paraphrase it, but it was really about be strong on vision and flexible on details, meaning that know where you want to go, but sometimes you have to be flexible enough to accept the daily iterations along the way to get there. So, if you really want to build something and you have a vision of where you want to get to, holding true to that North Star is important, because some companies fail because they're pivoting too much, meaning that every day they're changing their North Star, and it's hard to get somewhere if you're not hard in the vision. And then on the flip side, some are the total opposite, where they're so rigid in what they think they want to do and don't realize you need to understand the consumer feedback, understand the market changes, and kind of be flexible enough to, snake your way through the obstacles until you get to that vision. So it's just something that's always been important to me, is strong on vision and flexible on details.
Yeah, awesome, mate. So I completely agree with that. Really powerful. And we connected through our networks. So I learned about your awesome journey from having over 25 years of business technology and management experience, having founded and exited several companies in that time, to leading a data platform and consultancy in the entertainment space, and recently founding festivalPass. You're an awesome guy, and I'm sure you continue to innovate the festival and events industry and make the human experience much better for everyone. I am very grateful that we connected, and I look forward to working with you in the future. So Ed, how can people find you, get in contact with you?
Sure. So on the festival side, festivalPass side, Instagram is one of the best, festival_pass, but you'll find us just by typing in festivalPass. Same on Facebook, same on TikTok, Twitter. But personally, myself, I'm mostly active on LinkedIn. I know I need to be more active on Twitter because that's where the crypto space tends to play, Discord and Twitter. But just personally, I'm mostly on the business side on LinkedIn.
Yeah, awesome. And festivalpass.com, right, as well for the business?
Yes, that is correct. Festivalpass.com. Go sign up for free. Even if you're in Australia, we'll eventually get there.
Awesome, mate. I love it. So thank you, everyone, for watching and listening to this show where we talk about everything on business growth. Please like, subscribe, and leave us a 5-star review. You can find me on Facebook, LinkedIn, Instagram, and YouTube as Athin Cassiotis, or visit my website, athincassiotis.com. I completely agree with you, or do I? The only way you will know is if you tune in next time. So until next time, remember that our business grows when we learn skills and take action using them in spite of fear. So remember to design your growth and results.